Renting your mortgage property with a real estate professional. Welcome, hosts. If you're considering renting your mortgage property for extra cash, you've come to the right place. But before diving in, there are a few things you need to know. As a short-term rental host, you'll be opening up your home to guests from all over the world. While this can be a fun and lucrative venture, knowing the legal requirements, financial implications, and potential risks is important. But before we get into it, don't forget to like and share this video with your friends. Be sure to subscribe to our channel to get notified of the next video from us. Shall we start? Legal requirements for renting out your mortgaged property. As a homeowner with a mortgage, knowing the legal requirements for renting out your property is important. The Federal Housing Administration, or FHA, stipulates that borrowers must reside in their homes for at least a year before renting them out. This is because the FHA's primary goal is to help Americans become homeowners, not landlords. However, this rule has some exceptions, such as when the homeowner needs to move for work or has other extenuating circumstances. In such cases, the homeowner may be allowed to take on tenants before the 1-year mark. It's crucial to understand the implications of violating this rule. If you're caught renting out your property before the required time frame, you may face legal consequences, and the lender may even demand the full mortgage amount be paid immediately. Moreover, breaking the rules could negatively impact your credit score and future loan applications. Impact of short-term rentals on mortgage payments and interest rates. If you're considering investing in short-term rentals, or STR, you may wonder if rising interest rates will impact your profitability. While it's important to study market cycles, it's crucial to understand that every cycle is unique, and the attributes that caused the last recession may not cause the next one. According to AirDNA's 2022 Vacation Rental Outlook report, demand for STRs has only increased since the pandemic, generating 40% more revenue with 10% fewer listings. The report highlights the rise of remote work during the pandemic, with 60% of workers expected to choose a hybrid approach for returning to the office. This trend, combined with the lack of STR supply, will continue to drive demand for short-term rentals throughout 2022 and 2023. However, the competition will become fiercer, and property owners must differentiate themselves from the crowd by building unique properties such as log cabins, A-frames, tree houses, and tiny houses. As a rental estate professional, it's essential to keep a close eye on the market and stay informed about any changes in interest rates that may impact your mortgage payments. You can also consult a financial advisor or real estate attorney to help navigate potential complexities. Insurance coverage for short-term rental hosts. If you're a real estate professional renting out your property on platforms like Airbnb or VRBO, having short-term rental insurance is important. This type of insurance covers damages or losses that may occur during the rental period, such as property damage or liability for injuries or accidents. Short-term rental insurance policies can vary in coverage and premiums, so it's important to carefully review your policy to understand what is covered and any limitations or exclusions that may apply. The insurance typically provides liability coverage and property damage protection for hosts. If a guest is injured on your property or causes damage to it during their stay, you may be covered for financial losses. Some policies may also cover lost rental income if your property becomes unusable due to damage or other covered events. The cost of short-term rental insurance can vary depending on location, property type, coverage amount, and insurance provider. On average, it can range from $150 to $500 per year. However, some providers may offer hourly or nightly coverage, which may be cheaper but provide less coverage. Tax implications of renting out a mortgaged property. If you're thinking of renting out a property that you still have a mortgage on, there are some tax implications you need to be aware of. Here's the rundown. First, your rental income will be added to any other income you earn during the tax year, such as from your job or savings. Second, you must declare this income on a self-assessment tax return each year. Third, however, you may be able to claim certain expenses as tax deductions, such as maintenance costs and letting agent fees, if you have a buy-to-let mortgage. Finally, here's the tricky part. Landlords can no longer deduct mortgage interest from rental income to reduce their tax bill. Instead, you'll receive tax credit based on 20% of the interest element of your mortgage payments. This could mean you'll pay more tax than before the rule change. It's important to consider all this when considering renting out a mortgaged property. As a real estate professional, you should consult a tax expert to ensure you're fully aware of your tax liabilities and take advantage of all available deductions. Finding reliable tenants and screening guests for short-term rentals. As a real estate professional, renting out your property, finding reliable tenants, and screening guests for short-term rentals is important to protect your investment. Here are some tips on how to do it. Number 1. Set expectations. Clarify your house rules and ensure the guest fully understands and agrees. This helps you understand what type of guest they'll be and increases your chances of weeding out problematic ones. Number 2. Confirm details. Verify the guest's name, contact information, and the number of guests staying. Look out for any discrepancies or details that need to be added up. Register any additional guests and get their information. Number 3. Research online. Check the guest's online presence to learn more about them. Try Googling their name and phone number, and check their social media profiles. Finally, use a screening service. Consider using a screening service to verify the guest's identity, employment, and rental history. This can provide additional peace of mind. By taking these steps, you can increase your chances of finding reliable tenants and screening guests for short-term rentals. This helps protect your property and investment as a real estate professional. Maintaining the property and addressing tenant complaints. As a real estate professional, you need to be prepared to handle various issues that can arise with your rental properties. One of the most important aspects of property management is maintenance and repair. Stay on top of regular maintenance and promptly address repair issues to keep your tenants happy and prevent small problems from becoming big, expensive ones. Communication is key when it comes to addressing tenant complaints. Respond promptly and professionally to any concerns they raise. Make sure your tenants know how to contact you and how quickly they can expect a response. Having a system for handling after-hours emergencies is also a good idea. Pest problems can be a real headache for both landlords and tenants. If a tenant reports a pest problem, immediately address the issue. Setting competitive rental rates for short-term rentals. When it comes to setting rental rates for short-term rentals, there are several factors that a savvy real estate professional should consider. First and foremost, consider the season and any upcoming holidays or events that may impact demand for your property. During peak times, you can charge a higher rate, but during slower times, you may need to adjust your pricing strategy accordingly. Next, take a look at what your competitors are doing. Check out other similar listings in the area and see what they charge. If they are consistently booked, they may charge too little. If they are frequently empty, they may charge too much. Setting a minimum night rate can help ensure that you are not losing money on shorter days, and adjusting your booking window can help fill the gaps in your calendar. Finally, consider using proximity-based pricing, which adjusts the price based on the booking date's proximity to the actual stay. This can help encourage guests to book further in advance while also allowing you to charge a premium for last-minute bookings. Compliance with zoning regulations and homeowners association rules. A real estate professional must know and comply with zoning regulations and homeowners association rules. Zoning regulations dictate what properties can be built and how they can be used. Ensure you understand your area's zoning laws before purchasing a property or renting it out as a short-term rental. Homeowners associations also have rules you must know as a property owner. These rules are in place to maintain the look and feel of the community and ensure that all residents follow the same guidelines. Review the HOA rules and regulations before purchasing or renting a property as a short-term rental. Violating zoning regulations or HOA rules can result in fines and legal action, which can be costly and time-consuming. As a real estate professional, you must ensure that your properties comply with all relevant regulations and rules. Hiring a property manager or real estate professional to assist with rental management. Managing rental properties can be time-consuming and stressful for a real estate professional. Fortunately, there are options to make the process easier, such as hiring a property manager or real estate professional to handle the day-to-day management tasks. One of the biggest benefits of hiring a property manager is their expertise in the field. They have a wealth of knowledge about the local market and can help you set the right rental rates, screen tenants, and deal with legal issues. They can also handle maintenance requests, collect rent, and communicate with tenants on your behalf. Another benefit of hiring a property manager is that they can save you time and energy. With someone else handling the day-to-day management tasks, you can focus on other aspects of your real estate business or personal life. However, choosing the right property manager or real estate professional is important. Do your research and ask for referrals to ensure you find someone with a good track record and experience managing properties similar to yours. Also, be prepared to pay for their services, as property management fees range from 5 to 10% of the monthly rental income. Renting out your mortgaged property can be a great way to earn extra income. However, knowing the legal and financial implications and potential risks is essential. Working with a real estate professional or property manager can help you navigate the process and ensure you comply with all regulations and have the right insurance coverage. They can help you find reliable tenants and set competitive rental rates. You can make your short-term rental venture successful and profitable with the right guidance and support. So, if you're considering renting out your mortgaged property, be sure to partner with a trusted real estate professional who can assist you in managing your rental property. What will you surely remember among these guides we have for you? Comment down below and share it with us. Again, don't forget to like, subscribe, and share this video. See you next time.